We have Gary B. Smith, Kadina Group President, back with us. We also have Rob Morgan, Chief Investment Officer for Sethi Financial Group in Philadelphia. Thanks for joining us. Rob, I'm going to go to you first. We're looking at this free fall in the global marketplace this morning. How much of a drop do you expect in the U.S. today? Right now, we're indicating maybe a 450-point sell-off at the open for the Dow.
Yeah, I think, Lauren, it's going to the situation will improve as we go forward on the day. You know, the Dow futures were down as much as 800, and they've come back pretty dramatically. I think that some rationale will take place here, and as I mentioned when I was on the show about a week ago, I had some ideas on insulating a portfolio against the Brexit. You know, which is basically a sagging pound, rising dollar. And it's not too late for U.S. investors to do this. You know, avoid the international equities because countries are going to continue to rumble through the summer about leaving the EU, and rotate into more defensive sectors, utilities, telecom, materials.
Gary, I wanted to ask you specifically as we await now. By the way, today is the end of the month. I was speaking with John Corpino of Meridian Equity Partners. End of the month, end of the quarter, end of the first half of the year. We're starting off this day with a 494-point loss for the Dow futures, and he predicts that we could end off the lows of this morning, maybe down 200 or 300. Your thoughts?
That is reasonable. Normally, you know, I think right now we're seeing this is all emotional trades, if you will. We'll probably open way down. I expect a spike up, but what I think is, you know, kind of what I said earlier, I think then we'll kind of drift down for at least a few days. I do think there's some buying opportunities, though. Gary
B. Smith is a calmer mind. Rob Morgan, you too. What about you, Stephen Guilfoyle?
We're going to get our chances. Like I said before, it's a little sloppy here. S&P futures are trading around 2030. I want to see them get to around 2042.
Okay.
If you add in the fair value, you can get it to 2050 for the cash.
Okay.
That's where I think we need to see. We need to see a constructive hold of the 2050 level. Then we'll feel much better going on into the day, where we have what's going to be a very hectic close, which almost anything could happen.
I wanted to bring in, first of all, we have a graphic of the biggest point losses that we have seen in recent history for the Dow Jones Industrial Average. At the same time, we know that the exchanges across the globe are ready for big market moves today. Circuit breakers, for example, are in place where if we were to see, for example, a drop of 1,260 points on the Dow Jones Industrial Average, we would first then see a pause for 15 minutes. And then if it gets worse from there, you could, halt trading again or close the markets by the end of the day. So we are anticipating a big move this morning, a sell-off, but we'll also have volume on the close as well as we have some.
I don't think anybody at this point, and you guys chime in. Rob, do you expect to see any circuit breakers triggered today, or that's not the type of selling we're anticipating?
I don't think so, Lauren. And in fact, building on a little bit more of an intermediate to longer term case, because I just talked about the short term, this is going to be a bad news is good news thing for the Fed. The Fed is not going to do anything over the summer, and given their propensity never to really raise rates before an election, we're not going to see the Fed raise rates until the earliest December and maybe into next year. And then longer term, England isn't going to just fall and slip into the Atlantic Ocean. This isn't going to happen for 2 years from October, when Prime Minister Cameron leaves office. So I think people are going to take a little bit of a longer view after the short term.
Gary, you agree. Britain stays afloat. What does the Fed do here, Gary? Are they standing down for the rest of the year through the election?
I think they are. Even if we didn't have Brexit, I think that the economy has been just weak enough for the Fed to do nothing. The only point I wanted to add to Rob's about the UK not falling into the ocean, this presents some buying opportunities. In fact, one intriguing area to look at is the British pound. You can buy that via an ETF, FXB. It's at, what, like a 31-year low?
Yep.
I mean, are people going to stop buying biscuits and tea? That might be an area to look at right now.
Gary, very interesting point. Stephen Guilfoyle, we've talked about Donald Trump time and time again. Today we saw him coming out of his helicopter with his Make America Great Again cap. We're sort of in the moment where Britain's saying, make Britain great again. Is this the Donald Trump moment? Certainly, that he was hoping for, talking about immigration, talking about trade. Is this something that helps Donald Trump in his campaign?
I don't know if it helps Donald Trump, but he may have helped Great Britain decide the way they decided, being that the argument was largely about sovereign border control. being that you saw by virtue of the individual betting that the little guy was feeling disaffected and voted against the status quo. Those are his constituents.
And Donald Trump said, and we're looking at him making his way through the crowd right now in Scotland at the Turnberry golf course there. He's invested a lot of money in that. They're going to reopen it today. But you know what he called the vote in Great Britain today? Quote, great thing. Sounds very much like Donald Trump.
That's right. And he said that the people were angry. They were angry about immigration and people coming into their country, not even knowing who they are. Gary, wanted to bring it back to you. We see investing now in the safe havens, gold, utilities. Do you expect that to continue today? And how do you calm the fears of investors today who look at their 401ks and IRAs and are worried?
All right, so first of all, on the stuff like the gold, those are reaction trades. I wouldn't touch those. I would go the other way. You know, we talked about the British pound. I would start to look at oil, which has already looked like it's going to plunge. Now might be the time to get back and maybe be a company like Exxon, if you will. You know, long-term, how to calm investors' fear. Look, it's the typical advice. Fortunately or unfortunately, it's a long-term game. These are normally buying opportunities. I think calmer minds will prevail. I think if you look at your portfolio, even a year from now, it's going to be higher than it is this morning.
And Rob, we're seeing what a British exit from the European Union is doing to global equities. What does a Donald Trump presidency do to global equities?
You know, I don't think whether we have Donald Trump or Hillary Clinton, in a lot of ways, in the long run, I don't think it's really going to matter that much. I think markets don't necessarily. If you look historically, markets have done better with Democratic presidents, but only by a slight amount.
And quickly, Stephen, would you respond to that? What does the market look like under a Trump presidency?
I don't think it looks possibly any worse than it would under a Hillary Clinton presidency. Can I quickly address gold?
Quickly.
Quickly.
We're done.
All right. Now that the Fed can't move, it's not going as low as the other fellow thinks. All right. Gold's going higher.
All right. Well, we thank Rob Morgan, Chief Investment Officer for Sethi Financial Group in Philadelphia. Also, Gary B. Smith of Kadina. And right here on our set with us this morning for a couple of hours, Stephen Guilfoyle of Deep Value. We thank all three of you.